Let me start with you. We've seen a point where financing in India has gotten skewed towards everybody approaching banks. A capital market as deep as here is absent back in India. Do you find the case where banks get overburdened with having to finance all growth in India?
Well, it's certainly true that banks are facing a more challenging time, both foreign banks and Indian domestic banks. And that is partly as a result of previous exuberance in lending that has obviously been hit by the economic slowdown, the depreciation of the rupee, and of course interest rates, which have been challenging for everybody. So I think in terms of credit growth, we're certainly witnessing one of the slower periods for India. The Indian banks will soon have to implement Basel III, which will be quite challenging, frankly. It's been challenging for all banks to implement Basel III, so that will inevitably mean some further deleveraging. That will inevitably mean greater capital raisings, obviously for the public sector banks owned by the Indian government. That's also going to present some challenges. So yes, I absolutely agree with you. We need a greater diversity in the pool of financing, but it is not unique to India. Europe is facing exactly the same issues, where 70% of financing comes through the banks, only 30% through non-banks. The reverse is true in the US, where actually a minority of financing comes through banks. The majority comes through capital markets and other forms of finance. And I think the journey that Europe is on is almost exactly the same as the journey that India is on.
Mr. Sethi, could you talk to us about how the public sector banks, along with the projects that are defined as projects that take the nation forward, the role that the public sector banking space played, and is not perhaps spoken about much, in backing those and making sure they remain viable through the course of their execution?
See, the investment pattern as it has happened last 4 or 5 years. All public sector bank, including around 16 to 17% of their loan book is to the infrastructure sector. Now, as the projects have started developing, there have been bottlenecks. That's one part. Economy has slowed down in between. That has been another impact, which has been, as he rightly said about the Basel III impact. On the top of it, the projects which have been launched and they have not kick-started, the banks are stuck somewhere in between. Now, where is a solution to that? I think the capital part, the government of India has already announced in that Indradhanush project around 70,000 crores. That's what they are going to pump in over a period of 3 years, and 20,000 is going to come this year by itself. So that is one step. Now, solving the problem of infrastructure projects which are being set up and not working well. The Prime Minister's monitoring group by itself is taking care of those aspects. The discussions are held not only with the industrialists. It's a common platform being developed where the banker is there, the entrepreneur is there, and the regulator part is also there to some extent, but at the same time, ministry people, those who are connected to that particular batch, they are also together. So it's a team working together to put the projects back into shape. I think that's going to make a lot of difference.
Do you see a lot of streamlining that is coming in place now?
True. And on the top of it, I think as a banker, the question which you have raised, the regulator part, one, they have said from 1st April 15 rather, any restructuring, if it is done, it will be going to a NPA. You can do the restructuring, but there is a first concept of declaring it NPA. But there is a simultaneously a light given, in the sense those projects which are stuck, but there is an economic life to that. Those accounts can be restructured in 525 mode. Means the loan can be taken over to a period of 25 years, leaving 15% of its economic value also, so that repayment is there. I think the government intent on that is very, very clear. The public sector bank who have been core of that activity when the private sector banks were not visible into the financing, that is where public sector banks have taken a bit of a hit also. But this is a time when the economy is growing. The public sector bank will be certainly the beneficiaries also.
Richard, the thing is, as this government primes the manner in which it wishes to own and wishes to execute the functioning of the public sector banks, we've had an example 7-8 years ago in the United Kingdom where just following the financial crisis, you had a couple of banks that needed to go under government ownership for a while. Are there lessons to be learned from finding just the right light touch of saying, look, here's how much, willing to let you run the way you wish, but be mindful that the runaway practices of yesterday won't work. Are there lessons of government ownership that can be learned from the United Kingdom?
I think there probably are some lessons that can be learned, but obviously the critical lesson is not to get into that situation in the first place. There is an active unit within Her Majesty's Treasury which manages the banks and are looking at it very much as an arm's length investor on behalf of the UK population. So there is intervention. We've seen, subsequent to 2008, we've seen instances where that intervention has been possibly slightly more obvious than not. We've had changes in senior management. We've had all sorts of interventions that have occurred where it is perceived that actually the running of the banks may not play particularly well in a political, in a political point of view. So I think you have to look at it necessarily as a kind of a learning experience. Certainly in the UK, I think it's been a learning experience. And have we learnt things? Yes, we have learnt things. We're now coming out of the end, and we're going to be seeing some of these banks coming and issuing equity into the market.
Edward, if I could talk to you about the role that foreign banks play in India. Yours is a bank that's been there for 160 years. Given that, would it be fair to say that they continue to remain skewed towards a function of capital market activity more than the large ticket lending that the basic banking functions for projects or for real estate construction? That foreign banks have stayed away from that and chosen to finance via securitization, finance via capital market activity. Would that be a fair comment?
I think there are probably several different categories of foreign banks, as it were, some of whom will absolutely fall into the bucket that you described, but others, such as Standard Chartered, which is more of a commercial bank, I would say, than an investment bank type activity, does obviously a very significant amount of both sort of loans and restructurings for companies and individuals in India, but also one of the great things about India is clearly the number of entrepreneurial people and businesses that are, as it were, investing elsewhere. And Standard Chartered's been able to work with many of its clients overseas as well as in India. But I think we've all, to a greater or lesser extent, been involved in some of the infrastructure and other growth story issues of the last few years, and some of those have been loans that are, coming home to roost. So I think, going forwards, when you're looking at a new generation under this new government of infrastructure programs and genuinely sort of aspirational drive to reshape the economy, I think all banks will have a role to play in that. And bear in mind, the foreign banks are also subject to the PSL targets, in fact, not just domestic banks.
True. Mr. Sethi, now under the guidance of the regulator and the government, you had a session back in January where the government put all the public sector banks together and said, look, here's our philosophy of how we'd want these banks run. In light of that, is there now a fair assessment and a true recognition of the size of what the bad loan problem is and a common strategy in how to deal with that?
First, to reply to your question, I would like to compliment the Standard Chartered also. So their role as a banker, not only Standard Chartered, HSBC, also equally Barclays as well. Where the Indian banks are looking for a foreign investment by way of MTNs or whatsoever, these are the banks equally taking us out to conducting our non-deal road shows, arranging for the meeting with the investors. So it's enabling each other. Like the Standard Chartered or any of the foreign bank or any of the UK resident starting any project in India. Now, if he needs the Indian rupees, the Indian banks certainly are there to be providing that help. So it's a mutual appreciation of each other as a business entities and helping the business to grow in totality. I think that brings the foreign bank as well as the Indian banks together. Coming to your question on the NPA resolution. One, the government is very serious at the moment that no, NPAs, if they have been created, there should be a way out to come out of it. The Debt Recovery Tribunal, I think that's one of the main focus area from where the recovery is happening in a bigger way. But at the same time, if there are DRTs, I think around 34, if I am right, and 5 of them, they are going to open more. The cases as they are heard, there is still a lot of pendency.
Right.
And Ministry of Finance now it's going to come more appropriately to tackle that issue. Let all those be through sort of a e-DRTs. Basically, all those, you have to get the documents and clear your decision. There should not be too much of the deferment zone, just one context or the other. So that recovery process will get faster. But this is sorting out the issues where accounts have become already NPA. Now, another which point I have already talked to, make the economy moving, make the projects kicking, so sorting out temporarily that problem also. Thirdly, through Reserve Bank of India, the government has come very strongly going through that SDR route, strategic debt restructuring. So in that, if we are taking out the borrower who is not willing to pay the money, 51% of that holding can come to the banks. It will be a bit of a challenge. You can take over the management, but can you run the industry?
So has the government helped you understand how that process of once a willful defaulter and the management change does happen, they don't expect the bank to run that company.
True.
Can you explain to us the process that follows after that?
I think it's a start of the process, but at the same time, the period of 18 months which has been provided under that SDR mechanism, 18 months is a good time for the bank to get the technical economic viability study done. Maybe look at the interested parties who are willing to come and manage that show. Certainly, there may be some haircut here or there. I think banks to that extent may be willing to take care of that part. So that will be providing a message to those type of borrowers, those who are not willing to pay and take the public money into their account. I think that message is very clear. And 1 or 2 projects, the State Bank of India, in collaboration with other banks, they have started that process also.
Okay. Richard, the thing is, through 2006-07, you saw this wave of companies looking to overseas financing, accessing FCCBs, external commercial borrowings, and then you had the turn of, as he mentioned, the currency. Is there skittishness now amongst companies to access overseas markets? Because much of this, as the RBI also had mentioned in the past, is that there was a lot of exposure that was unhedged. And when that unwound, a lot of companies were in trouble. In the conversations you do with the members of the UKIBC, and particularly the financial members, are you seeing their own clients tapping into cross-border markets?
I think you've got to differentiate between the types of companies that you're looking at. And clearly, a lot of the companies that went out into the international markets through the instruments that you talk about prior to 2008, a lot of them probably should not have gone there. And we're having to live with the issues subsequently. But even last week, we've seen announcements or intentions of some of the key leading companies, HDFC and Bharti, saying that they are intending to move forward to raise funds in currency through bonds listed on the London Stock Exchange. So clearly, when you're a company of the size of Bharti, you have to manage your debt on a portfolio basis. You have to look at the currencies. Obviously, the cost is important. So I think there's a differential between companies that maybe shouldn't have gone for what was perceived to be cheap money, but actually wasn't, and those companies that are actually positively and constructively managing their debt.
There's this constant comparison, Edward, about the way India's infrastructure is evolving and is being financed, and the way China did it. What are the differences in how much realistically both of these governments can provide to enable that financing?
I mean, governments play an absolutely critical role as a catalyst in encouraging, facilitating, and motivating parties to get involved in these things. And clearly, it's got to be part of a national plan for the economy. And what you're seeing with this government in India is an absolutely clear commitment to reform, to build, to grow. And no wonder, when you think about India, more than half of 1.3 billion people are under 25. You've got incredible rates of urbanization, incredible growth of the consumer classes. So you've got to build for the future. And that's part of India's amazing story. It is both now and well into the future when you look at the demographic there. So government's central to it. The question is, how much balance sheet does the government put behind it? For example, in UK Export Finance, which is an institution here which basically has access to the UK government balance sheet to help exports abroad by underwriting a certain portion of risk. And that helps banks use their balance sheets more efficiently and price things more competitively. That's a key element in this.
Sethi, over the last 7-8 months, both the Prime Minister in the sessions held in Jan and Feb and subsequent meetings with both Finance Minister Jaitley and Minister of State Sinha, they've been very clear about the philosophy with which they're saying, look, slowly we will evolve you to sharp, competitive banks that should be world-class and that will be run independently as you all choose to. Your lending will be what you all choose to. Are you seeing that process beginning?
Not only beginning, it's already in the office. Okay. It's already established.
Tell us about it.
2-3 things maybe. One is that there is the term used as a political interference into the public sector bank.
Right.
I think that's no more, I can say with certainty. You don't get too many calls, no, this person is to be transferred or this person is to be given a loan or somewhere. Those type of issues are already over.
Okay.
So that gives a lot of elbow room to the banks to manage their show in their own ways. Now, doing the business in my own way, in a competitive way, you look at the opportunities which have been created. People may be saying the financial inclusion, perhaps you are taking into account those people who are financially excluded.
Right.
But big opportunity as it has come through, around 19 crore accounts which have been opened by all the banks, and more of them again through the public sector bank. That 26,000 crore is a balance available in those accounts.
Okay.
The money which was being either the direct benefit transfers which were happening not through the accounts but through the government different channels through the states, all that money has been properly channelized. One part of it. Another part of it, I think yesterday only I was going through, $380 billion is the scope of investment available only to upgrade the financial inclusion part. You have to reach the rural India. You have to get the connectivity done. Not only the connectivity, you have to do the microfinancing. Maybe to the same extent, small industries coming into those rural area needs that financing. So all that tie-up which is going to happen, either it is happening through small finance banks or maybe the telecom companies, they are also going to be in that pipeline. 11 payment banks also being inducted. So you will get a whole lot of activity only onto the one of the segment, which is financial inclusion, where people are finding as if financial inclusion is something which is forced on the, onto the banks. I would say no, it's an opportunity.
Exactly.
That's one part of it. Now, doing the business competitively, I think more is the message for the investors, those who are coming into India. I would like only 2 or 3 aspects if they are picked up. The opportunities are immense. 175,000 megawatts power generation that's going to happen by 2022. Out of that, 100,000 megawatt is only solar. Now, within solar, if you pick up around 7 to 8 crore per megawatt, that's the cost. 800,000 crore investment to come only into the solar power. Leave aside the through biomass, hydro, or so those will be additional. One opportunity. The earlier panel, there was a discussion about the smart cities. 100 smart cities by itself, again a big investment going to come. 50 million new houses to be constructed within the Prime Minister ambition that every person has to be provided with a house by 2022. So the government has laid the focus very emphatically where they want the country to go. Incidentally, yesterday there was another question raised to me, and the point asked was whether are we going the China way? Is it going to be a busting of the economy? We have yet to start.
You think that bubble
no, it's not the bubble. I would say it's a creation of the capabilities and capacities first. Once you are able to link all those financially excluded people into the stream, the demographic advantage which you talked about, providing them the skills to upgrade the industry, to upgrade the education, lot of opportunities. I think there was a small question which was raised earlier, why in UK the Indian students are not provided visa to the extent it is required. If you look at yesterday's report only, in USA, the number of students, in 1 year, they have grown by 29%. From 103,000, last year it was 132,000. So, and it's not only 29% increase in that students going there. At the same time, the amount spent by that 132,000 is close to $3 billion a year. If that is the amount being spent to gain that education or whatsoever, why the country should be left alone? UK should equally be looking at positively. And more the people, those who get skilled and qualified here, even in UK, they will certainly be investing here or going back, but carrying that UK legacy also along with them.
He just outlined an entire range of what this government wants to see done in construction, in cities. Do banks like yours have solutions to offer the existing banking system and in new products, new solutions to raise this enormous pool of capital that the current structure perhaps does not think it can to that scale?
Well, this is an incremental process. We like to use phrases like Big Bang, but the reality is these things take a great deal of time, particularly in a country like India, the scale that it's at with the federal structure that you've got there, with sometimes challenges in getting legislation through Parliament to reform where reform is needed. Banks absolutely have a key role to play in that. It's mostly about their balance sheet, but it's also about innovation, safe innovation. One of the things that I think has really not helped is with the securitization market was killed globally as a result of the financial crisis. And that, I think, is a really important element because there's a large pool of investors out there who are sitting on walls of cash with nowhere to park it. And if you're going to get into infrastructure which might sit on a bank balance sheet for 20 or 30 years, which banks don't want, they need securitization to get that back out and to recycle their balance sheet for further loans and use. So I think banks will absolutely be part of the solution, but there's no magic list here for us.
Richard, there's the composition of what makes and what drives the economy changes from traditional industrial companies. Much of both the city and 51–52% of the Indian economy is services. To now this whole wave of what is commonly called e-commerce. New companies, young companies that are looking to grow faster, that are looking to multiply, not incrementally move, multiply their revenues and their top line. How does a financial system equip that kind and that part of the economy?
Well, I think that's a huge question and extremely broad. I mean, one of the topics that was debated in front of the Prime Ministers at the CEO Forum was what was used loosely termed the digital economy. And e-commerce is one element of that, an important and growing element. But actually, we talked about financial inclusion. We talked about smart cities. All of this is part of the digital economy. And funding that, how one funds that, is all about structuring the underlying proposition in a way that is bankable. And also looking at trying to match the assets and the liabilities, the funding. These are two elements that form absolutely core part of the financial dialogue that is taking place between the UK and India. We don't have answers on this. We're looking at those answers. And in fact, we've been asking the same questions for a number of years, particularly in relation to the long-term corporate debt market. So I think that these are things that are becoming more urgent, more pressing. Undoubtedly, our lords and masters are looking for answers, and we've got to become creative in trying to find those solutions.
Are Indian banks restrained by the limits put by the RBI in financing mergers and acquisitions and deal making? Because from what I remember, right, there was a point where you said, okay, here's how much exposure you can have to money raised for an acquisition. Does that make other instruments and non-Indian financial institutions come to the fore when M&A is being spoken about?
Well, certainly we've seen a diminution in M&A activity, certainly domestically. Internationally, obviously, you're in a different sphere because large companies such as the ones we've talked about, Bharti, Tata, etc., have substantial assets and cash balances and access to financial institutions offshore. And therefore, on a cross-border basis, certainly they have access. They may not like the valuations that they see out there at the present moment, but nonetheless, they have much more flexibility.
Mr. Sethi, turning to how this government is modeling what is called the devolution of power to the states, money and funding to the states, could you talk to us about how state needs and state projects are different from those that were earlier seen as commissioned by the center, commissioned by central PSUs, whether it's an NTPC or the like? How are state needs and state financing different?
I think I'll take it the other way around. Okay. It's not only the country has to progress through the central government. Right. The progress is happening both ways. Right. The state governments, they are playing their role. The central government is playing its role. Now, ease of doing business, I think on that also within the country, there are parameters laid, which state stands at what level. And incidentally, Gujarat again at the moment is at #1. And maybe 2 or 3 of the BJP ruled states, they are again there into that. Then this brings in a competition. Right. Now, center, as it has started devolving the financial assets to the state governments, like the share which was earlier less, now I think close to 46% is going to the state government. The state government will be more viable to be projecting. Yes. And the good part of our democracy is in the center you have a government represented by NDA, but in the states you have the regional parties also. So the regional parties, they within their own domain, they also have their aspirations. Right. So they will certainly like to grow their assets in a bigger way so that more of employment happens within their state. So those people have not to migrate even to the other states also. When the project finance has to happen, I will say fundamentally the question remains the same. Viability of the scheme, the capital to be contributed, banks willing to provide a funding. All those issues, I think they are more or less similar. But where there is like say raw material availability. Now, in one state, if you have that in abundance, certainly that state will get a benefit of those type of projects. So to that extent, that differentiation can be. But as a banking terminology, I will believe center or state doesn't make, that's it.
Mrs. Sethi, Edward, Richard, thank you very much for joining us.